This is Kawano from TKP. For the second quarter, we would like to start the earnings call. First of all, in terms of the highlight, in terms of the business performance, first quarter was 20.4.4, but in the second quarter, it was 54.4 billion. And so for the second quarter, we were able to mark the record high in terms of the quarterly performance in TKP. Our core business, which is the rental space business and the mid and long-term business, rental business, and the Nobody's bridal business are growing quite steadily, and that was the driver for this good performance. And also, space regeneration and distribution business that went announced. Now, in addition to the rental space business, there is a momentum of people going back to the office, and we have seen that the significant growth starting from April. And because of that, TKP has revised the guidance upward, and we have revised it to 104 billion yen. And so for the TKP core business, is expanding, and also the leisure and lodging business is also expanding. And in terms of the business progress, we have been active in opening new hotels. And in June, we opened 2 Appa hotels in Miyazaki Prefecture and 1 hotel in Yamaguchi Prefecture. And so, including the one in opening in Oita Station Front in December, we will have 20 in total Appa hotels. And in July, we opened Shonin Park, and the ramp up is quite successful. And the first park PFI business has started its operation. And in terms of the forecast, this time in the first half, because we had strong demand, we were very active in opening the spaces. And in opening those new spaces, the sales are increasing, but we had made prior investments, and in the third quarter and the fourth quarter, we can expect the profit to be generated. And so towards achieving the full year guidance, we have been progressing quite steadily, and that is what we're seeing now. And in the third quarter, we will be promoting the openings of rental spaces and share offices in landmark properties, and we want to capture the demand even further to improve our awareness and brand capabilities. And Fabit, that was transferred from Appa Hotels, we're not just offering the space, but also we would like to position this for people to interact between local companies and administration as well as startups. So the one that was newly opened in Takamatsu, but also after that, Fabit that's opening in Oita, we would like to position this as a place for people to interact together. And this will be positioned as a fourth pillar to activate the regional economy and also create new value. And the 20th anniversary celebration of TKP was held at the TKP Garden City Makuhari, and this banquet space that can cater for 1,000 people or 2,000 people used to be located in Shinagawa, but I have always wanted to have this in Tokyo. And so in the third quarter and the fourth quarter, large-sized event halls or banquet spaces will be procured. And we are looking for the locations, and in the third quarter and fourth quarter, we're hoping to establish this location. In bridal industry, Nobody's is doing quite well, and from the region, bridal demand is coming back. And in the second quarter already, bridal has already exceeded the pre-COVID level for both sales and profit. And so bridal and wedding is becoming more diversified, but the number of weddings held is increasing. I mean, they used to have limited number of guests, but the size of the guests are increasing, and the number of weddings are increasing. And so as TKP, we want to because we think there's going to be more demand for wedding, and the way wedding is held is becoming more diversified. So we look forward to addressing the diversified demand. And that was for the business forecast, and I gave you some summary on the business and strategy topics. And now I would like to hand over to Nagao-san, our COO, and our CFO, Nakamura-san, to give you more details. And I would like to hand over to Nakamura-san to talk about the numbers in detail, and also have Nagao-san explain about the strategic details, and then move on to Q&A. Thank you. Good afternoon, everybody. This is Nakamura, and I would like to take over and give you some details around the performance of the second quarter. Starting from the consolidated P&L, I would like to talk about the P&L for the business. And starting from the second half of last year, Lirikara has been included in the P&L. And starting from this beginning of this fiscal year, Novarese has been included in the consolidation. And so the group has expanded. So the number itself will become bigger. And on top of that, like Kawano-san has just mentioned, the meeting demand, I mean, people are coming back to the office, and we're capturing that demand. And so the space regeneration and distribution business, which is the XTK business, is growing in sales. And that's one thing. And the group company, Bridal, Novarese, is doing quite well as well. And so as the result, as you see in the middle of this chart, the Q2 net sales were 25.43 billion yen. And compared to the previous year, we were able to grow sales quite significantly. And for profit, OP was 1.437 billion, and ordinary profit was 1.167 billion yen. And so for one single quarter, we were able to achieve a very significant result. Also, that was the result for the second quarter. And I would like to talk about the ex-TKP business, excluding Lirikara and Novarese. And the next page shows the comparison just for the TKP business. And as I just mentioned, this is very solid as well. And the result for the second quarter is 12.451 billion yen, and OP was 1.257 billion. And you see the result for the same time last year, and we were able to grow the sales quite significantly. And flexible space, the meeting space business, typically has a shoulder season in second quarter because the business days are very limited in August, so it's a shoulder season. But for this fiscal year, as I mentioned before, people are coming back to meeting rooms, and we're capturing the face-to-face event demand. And so the sales were very similar to the Q1 level. Also, we were able to achieve a very significant increase in sales, and profit has grown a lot as well. And to give you more details, the gross profit margin has gone down slightly compared to the previous year. It's about 2.3 points lower than last second quarter. And as Kawano-san has mentioned, there was some advanced investment for large deals being recognized in second quarter. And so the cost of goods has gone up in second quarter, but that will be tentative, and that will not be take place in third quarter and fourth quarter. And we're expecting gross profit ratio to be higher in third quarter and fourth quarter. So we're expecting to have solid sales and profit in the second half.
And also for leisure and lodging business has been performing very well. And for the meeting rooms, lodging and leisure, the demand has been trending very solidly. And please look at the next page for the breakdown in terms of the net sales by service. If you look at different colors, this shows the quarterly trend of net sales by service. As you can see, year on year and also Q on Q, the revenue has been increasing, which is making almost record high levels. In particular, please pay attention to Q2 if you look at the room rent, which is at the bottom of the bar, which has grown so much year on year, and option revenue and also catering, F&B, revenue is up significantly. Even in a quiet low quarter, which is Q2, revenue in those services for the flexible service segment has performed very well. That is the biggest highlight for the second quarter. In addition, for the leisure and lodging, continuously demand has been trending well. Continuously from Q1, we have made the record high revenue. Therefore, overall, Q2 revenue performed very well. This pace is expected to be maintained in Q3 onwards. That is our strong expectation. This completes the briefing of the space regeneration and the distribution segment. Next, let me go on to the results of the Lirikara and Novarese business. For these two companies, which are listed entities, basically, we are just using their reported numbers as they are, as they report. And of course, there's a consolidation adjustment, but basically we are using their numbers. And please go to their disclosure for the details. But for Lirikara, there is a seasonality. In the first half, for them, seasonality is weak in the first half for Lirikara. So at the moment, their business is not so great. But so far, we are expecting a strong recovery for the full year. So in the second half, we'd like to support their progress. That's for Lirikara business. And for Novarese business, as Mr. Kawana mentioned at the beginning, their business is performing very well. At the moment, in Q2, which is spring season, April, May, and June, relatively speaking, their business performed well. And their seasonality-wise, this is a good season, but they exceeded their internal expectation in Q2, which is great. So probably this momentum is going to be continued in the second half of the year for Novarese, which is very good trend so far. Let's go on to the consolidated balance sheet and also cash flow statement. On the back of strong orders, we have been acquiring new hotel locations, and Novarese is opening new locations. And because of those strong openings of new locations, the tangible assets, fixed assets, have increased. And we have completed in Q2 in terms of the buyback. So net assets have been reduced a little bit. On the other hand, interest-bearing debt has increased due to the acquisition of fixed assets. So capital efficiency has improved. Together with the strong demand, using the leverage and interest-bearing debt, we have been investing in our businesses, such as for opening new locations in this quarter, and we are going to continue that going forward. Upward revision of the guidance. On August 14th, in Q2, we announced our upward revision to our guidance. Please look at the third column from the left, the new plan. You see the numbers after the revision, upward revision. OP, ordinary income, revised upward by 2 billion yen because of the higher revenue. In addition, because of the better business efficiency, we have revised our profit levels upward to these levels. 104 billion yen revenue and OP 9 billion and ordinary income, ordinary profit 8 billion yen are the new forecast numbers. In the second half, in Q3 and Q4, order is expected to trend very well, and they are trending very well at the moment. So towards the achievement of this budget, we expect to make a steady and good progress. Please go on to the next page. In the space regeneration and the distribution business, let me explain in more details. In the space regeneration and distribution business, there are two businesses, flexible space and hotel lodging training business. So let me first explain about the flexible space, which includes the flexible space for meeting rooms. Let me explain the result of the new openings and closures. If you look at this chart, as we have mentioned, On the back of strong orders so far, accordingly, we have opened new locations continuously, as you can see. In Q2, as you can see, we opened by this number for 3 months, 7 locations, and 6,529 tsubo, making more than 10,000 tsubos increased in the total of the first half. As a result, nationwide, we have directly managed 219 locations, and 11,000 tsubo or higher contracted area is now in our portfolio, which is steadily growing. Please move on to the next page. This is revenue per tsubo, which is our one of our KPIs. As you can see on the right-hand side, this shows the current Q2 revenue per tsubo, 45,000, which is very good number. So last year in Q4, 42,301 yen. So up this by amount. And on the left-hand side, you see the numbers before COVID. On the left-hand side, in Q2, because of the low season, even before COVID, 39,533 yen. Comparing to that, it's higher by more than 6,000 yen, which is doing very well. And furthermore, the effective contracted rentable area, Q2 before COVID, 54,000 tsubo was the effective rentable area. Now it's higher, 54,800 tsubo or so. So the total contracted area for the flexible space is higher compared to pre-COVID, and revenue per tsubo is now higher, reaching a record high level. So doing very well. Moving on to the leisure and lodging business. First, the number of locations. At the bottom on the left-hand side, you see some locations which were opened in Q2. And also at the bottom on the right-hand side, there are locations opened in Q2. So in total, 4 opened in Q2. And at the bottom on the right-hand side, 30 locations, totaling 56,000 tsubos. So we have many locations now in total for lodging and leisure segment. And if you look at in bracket, there are 2 which are locations to be opened in the future. Moving on to the hotel and accommodation, RevPAR, which is one of the KPIs, and also the number of accommodation locations, 8,140 yen, which is down by 434 yen. And in the previous Q2, 8,422, and the number of locations increased to 30, so more by 8 rooms. Relatively speaking, in regional cities, we have more locations in this Q2. So compared to Tokyo, RevPAR is lower in regional cities. So that is the reason for the decline of RevPAR. But accordingly, cost is lower. So in terms of the profitability, RevPAR is down, but there is no negative impact on the profitability. This is coincidentally just a different mix of locations in terms of the areas of locations. So the trend is still solid. ADI and OCC are trending steadily. That's the situation for the hotel accommodation trading business. This completes the brief explanation of the results financially. And other pages, moving on, we are going to give you updates on the specific businesses. And we are going to hand over to Mr. Nagao.
I would like to give you an update on the business strategy from my side. So first of all, for the space regeneration and distribution business, I would like to talk about the key of the new openings, and I would like to give you an update. For the third quarter, TKP Garden Premium Tenjin Bricks Cross, which is in Fukuoka, and also TKP Yokohama Minatomirai Conference Centers, these 2 will be opened. And Tenjin Brick Cross is located in the Tenjin subway, and this is directly connected to the subway station, so it has very good connection. And also, this is the center of the economy in Fukuoka, so we can expect a higher attraction of the visitors. And TKP Minato Mirai, I mean, we already have several flex space in Yokohama, but Minato Mirai is a little bit far from Yokohama Station, but we have a relatively large facility in Minato Mirai. And we have prepared this facility, and going forward, we think that within the Yokohama economy, there are many companies and enterprises, and so we think that we can capture more demand. And next is related to the flexible space, which is called the shared offices. And TKP Fabit Takamatsu, we are entering into Takamatsu in full scale, and also in Toranomon, which is in Tokyo, we are opening TKP Fabit Toranomon, and so we're have opened two share offices. And as Kawano-san mentioned at the beginning, share office, there are many competitors in this space, but we're not just offering the location or space, but also we're providing different software or contents as added value. What I mean is that, for example, of a community to develop startups, or a community where freelance people can interact with each other, and we will be active in offering those forum. And in order to do that, the regional banks or the regional companies or the local administration and the startup relevant functions will be involved in active communications, so that we can establish a place where information and the people locally will gather in this space, and that is what we want to do for Fabit. And next up, moving on to leisure and lodging business and the progress in the new openings. And Nakamura-san, the CFO, has already mentioned we have increased the facilities to 32 directly operated facilities. And in December, Upper Hotel Oita Station Front will open. And in front of Oita Station, we are opening this facility to be a base for tourism, and we want to position this as a value that offers a value for as a new accommodation place. So we're thinking of being very creative, and I'm hoping that this will be adopted by the regional visitors. And Atami Momoyama Rectole in next year and Hakone Goda Rectole are planned for opening next year. And especially within the leisure and lodging business, we mentioned several times about the Shonin Park opening, and it's been referred to many times, but as part of the Park PFI business, we're offering this resort facility within a park. I mean, we're developing a huge value add to a park. And Ishinoya Beppu is a facility, accommodation facility that has spas, but also we offer sand spas and also Hawaiian restaurants that values the scenery of the region and also food, and these are all provided comprehensively so that we can contribute to regenerating the value of that region. And also, as a tourist site in Oita, we think this can be leveraged, and we believe that our activities will be leveraged to drive the value of the region. And just to talk about the value creation in the region, especially in Oita, Upper Hotel Oita Station Front will open in December, March, and TKP Fabit Oita Station Front. I mean, this is right next to Upper Hotel, but we acquired this building, and we will offer a rental space as well as Fabit. And also, by using the open space, various events are being planned. And including Beppu, our Oita locations will organically be leveraged and comprehensively leveraged so that we can build a new community to invite new people into the community. And if for a startup business, TKP know-how can be used, and that way we want to promote active interaction amongst those people. And that was the update on the business strategy. And now I would like to talk about strategic investments and business alliance updates. And this is a slide that we're showing all the time. So this is just a simple recap about the TKP originally has the rental space business as the initial business that we started off with. And based on different grades, we're addressing different needs, and we have different facilities offering different grades. And on the left-hand side, right-hand side, we have catering or events or BPO. Bring value adds. I mean, we're adding services on top of the space, and we have been expanding our business that way. And the basis, the service or the value add that's supporting the business will be developed further and expanded. And on the other hand, we have other business like share office. Which is a little bit different to the hourly rental space. That's capturing a different demand, and we are responding to the needs in more detail. And also, we have the interior business for hotels and meeting space. And we have made Ririkara as our subsidiary that offers interiors. And the know-how of Ririkara of business development is utilized to move into the wedding business. I mean, after COVID, the number of weddings is declining, but like was mentioned earlier, we're seeing increasing weddings in the regional areas, and the Tokyo hotel wedding spaces are becoming more actively used. And so we would like to capture that momentum and the demand so that we can actively be involved in the change in the industry so that we can keep the good tradition in Japan and deliver profits as well. And this page shows the different expansion of the facilities, and it's just showing the previous slide in a different way. But like I mentioned, we have the rental space, which is a space regeneration and distribution business, and we will add business revitalization on top of that. And we will use that in revitalizing the industry. And at the end, we want to contribute to developing the value for the region. So we're using the meeting space as a basis, and we will leverage on the capability and expand that to the other areas so that we can expand our business scope so that we can work with the partners in the region and the stakeholders and develop a win-win relationship. And to talk about the subsidiaries, the Ririkara and Novarese progress, I'm just going to talk about the highlights. And with regards to Ririkara, in the metropolitan area, they're using our TKP facilities, and they have decided to host the sales event for interior products. And so that they can contribute to improve in the awareness and brand loyalty. And Nirikara's SG&A will jointly be spent by Nirikara and TKP, and we will jointly review them, and so that we're more efficient and effective using the expenses, and the cost reduction effect is gradually delivered. And so we will do our best so that we can improve our margin even further. And for Novarese, as was mentioned several times, but we're seeing recovery of the demand in the regional area, and so we would like to capture the demand increase so that the TKP corporate customers can be sent to Novarese facilities. And in order to do so, the sales reps, TKP sales reps will go through education, and we are doing viewing events for the customers. And especially the house waiting facilities of Novarese is very nice and lavish. And for the companies, they can use it for different events, commendation events or other events like award giving ceremonies. And this would be very suitable for such opportunities. And so as TKP sales, they will continue focusing on them.
At the same time, Novarese subsidiary sells gifts. Therefore, we like to promote their sales to TKP's customers. Lastly, Shonigahama Park. This is location, generation plan. So photo wedding. In Beppu, they can have beautiful scenery on the back in their photo. So we are collaborating with Novarese for wedding photos. So overall, for Ririkara and Novarese, for both partners, the number of touch points between them and TKP customers has been increasing. So in many different formats, revenue and cost expenses and customer referrals, overall, I would like to expand the number of touch points with each other so that we can enhance the corporate value for the whole group. This completes my brief update of businesses and the strategies and the policies. Thank you. Now, we'd like to move on to the Q&A session. There is no limitation as to the number of questions per person, but we'd like to answer one question at a time. If you have questions, please wait until the microphone is delivered to you. Please mention your name and the company's name, and also please start your question. If you have questions, please raise your hand. Anybody who have questions? Let's move to that person in the middle. Please wait until the microphone is delivered. Hi, it's Kuda from Toyo Keizai. Thank you so much for your presentation. I have 3 questions. My first question is on the rental space. Per tsubo revenue. Revenue per tsubo is increasing. And the increase ratio is higher compared to Q1. And also year-on-year, increase revenue per tsubo is higher. Would you please give me the reasons and the drivers? For example, in food and beverage, there was a strong demand recovery. Is that the driver? What are the drivers for the improvement or increase of the revenue per tsubo? Would you please give me the reasons? And do you think this strong momentum is sustainable? And what actions you are focusing on to continue this strong momentum? Would you please give me the strategies? My second question is also on the rental space business. In Yokohama and in Tenjin, you are planning to open new large locations. And as you mentioned, Mr. Kawano, the large banquet halls, you are trying to secure those large locations. And probably you were talking about those 2 new large locations, I imagine. But what is the specific image of the large locations like halls or banquets? And what is the progress so far? And what is your strategy in the medium to long term? My third question is on the profitability improvement of Ririkara. Looking at the performance at the moment, profitability has been deteriorating compared to last year. So what is the problem? I know that there is a seasonality, but excluding the seasonality, their profitability is not doing very well. What is the reason for the profitability of Ririkara, which is not doing very well? And what is the schedule for the recovery of the profitability? When do you expect their profitability to recover? Thank you so much. To your first question, in Q2, revenue per tsubo achieved a record high in Q2. And that's because of the insourcing of food and beverage, which we started since last year, that is being effective. So for F&B, we are not relying on outsourcing companies, but we are trying to provide internally. And we have been providing strongly competitive services. That's one of the drivers. And the second driver, as I mentioned earlier, the face-to-face demand recovery. So people are coming back to the office, especially foreign companies, IT companies are coming back to the office from remote working twice a week or 3 times a week, or even fully. Employees are coming back to the office and they don't have enough space for the office. So temporarily, they need to lease spaces from TKP for their temporary needs. So demand is increasing, and there's upfront investment to capture that demand. So you see that increase in in the revenue, but in Q3 onwards, you are going to see the improvement of the profitability. So rental spaces demands are more diverse compared to the past. So, and also events are increasing, and also on the holidays, on the weekends, we'd like to offer more services for events. So second question, Yokohama and Tenjin, those locations, large locations. For Tenjin, in the same building, there's WeWork as a new tenant in the same building. So it's a large space, but in my definition, I was talking about even larger locations or larger spaces. So accommodating 200 or 300 people, but 500 people, 800 people, for that type of large capacity. Elgara Hall in Tenjin accommodating 700 to 800 people. But if the number of people is larger than that, we have Makuhari, TKP, which was formerly Makuhari Prince Hotel, accommodating 2,000 people. And we use it for the 20th anniversary. But my image is that it's slightly distant from the station. So people in Kanto or Tokyo, the access is important. So when I think about large locations, there are many redevelopment projects in Shinagawa, so we don't see many large banquet halls or large spaces. So there's strong demand to large locations. So we had Shinagawa Goose for large location. We have still customer base for that. So immediately we'd like to have larger locations accommodating 1,000 people or even 2,000 people. So that's my plan. That's my motivation or passion to create larger locations more. To your third question, Lirikara. In Q1, Q2, their performance is 2 months delayed. So information is lagged. But in the third quarter, I'd like to tell you to please ask Lirikara. But my impression is that they are making a progress in accordance with their plan. I think they are making a recovery in the third quarter. So in the third quarter, I expect their performance to be in line with their plan. That's my impression. So let's see how they perform in Q3 and Q4. We are hoping them to make a recovery for the rest of the year. Profitability. The number of new housing starts is coming down year on year. So gradually, there's a negative impact. But replacing that, they are focusing on deform business. So I expect deform demand to perform well. And Lirikara is celebrating close to 100 years anniversary. So they are working on business efficiency improvement. So we think they can enjoy the cost reduction benefit, and also they are going to win customers from marketing and sales activities. That's all.
Just to add on to that, you have negative performance in the first half for Lirikara. I mean, the profitability of Lirikara is declining, but what were the reasons for the decline? Well, it's the same. I mean, there's seasonality in the business, and it's more concentrated in the second half. So if you combine pluses and minus together, it's minus 100 million. But we think we can recover that in the second half. That's my understanding. Okay, thank you very much. Thank you very much. If you have any questions, please raise your hand. Is there anyone with any questions? We would like to close the Q&A session. Thank you very much. That will be all for the financial results announcements for the second quarter of the year ending February 2026 for TKP. If you would like to exchange business cards, please move towards the front of the room. And along with your materials, we have distributed the survey sheet, and I look forward to your cooperation in filling out the survey. And the survey, once you fill them out, please leave it at the desk before you leave the room. Thank you very much for coming to our briefing session despite your busy schedule.